So in this video I'll be doing two things. One is just providing a brief overview of corporate taxation, since there's no assignments associated with this chapter and it's not on the final exam, nor is this a corporate taxation course, but just to give you an idea of how C corporations are taxed. I'll be presenting that in this video, and then I'll be providing a brief overview of what you can expect on the final exam. Alright, so C corporations are not only legal entities, but they are taxable entities by the IRS, formed under the laws of the state of incorporation. Corporations can use a cash basis or accounting if the average receipts are less than or equal to $5 million, or if inventory is a non-material factor in their revenue generation. Most C corporations would be accrual. On the formation of a corporation, the transferors, as long as they maintain 80% ownership interest or control of the corporation, don't have to report any gains. And adjusted gross income is not used for Form 1120, which is the C corporation tax form, since, as we'll talk about shortly, the C corporation will take its balance sheet and income statement on M schedules and convert them into financial reporting that is consistent with IRS guidance. And in corporations, or C corps, we have earnings and profits. It is similar in the financial accounting world to retained earnings. And then distributions of earnings and profits are dividends to shareholders, and of course dividend payments are not deductible by the corporation since they're a liquidation of ownership interest. So corporations record upon the distribution or in full liquidation of the corporation, they record their assets and liabilities first at fair market value. So in many cases they'll step up the value to fair market value, and then they'll record any gains or losses in the event that they have to step down the value. And then the shareholder, upon liquidation, will report any capital gain or loss equal to the fair market value of the distribution that they receive upon liquidation of the corporation, and then they'll compare that to their stock basis. These are the schedules I alluded to earlier, the Schedule M1, which is a way to reconcile the book income to the taxable income, since they used, in many cases, different rules, does FASB and the IRS. Some of the differences between FASB rules and IRS rules are temporary and some are permanent. An example of a temporary difference would be depreciation. If the corporation is using straight line for book purposes and accelerated for tax purposes, then that difference between the two is temporary. A permanent difference might be if the corporation's invested in municipal bonds and they earn interest, they would report that interest as income on their corporate income statement, but for tax purposes that interest for federal purposes is tax exempt, and that's a difference that would never unwind. That's permanent. So what's unique about these C corporations or large corporations is that they can obtain subsidiaries, buy subsidiaries, as long as they control at least 80% of the other corporations. And then they can elect to file a consolidated return, that is to say they can, the parent and all subsidiaries can report on one income tax return. Once they make this election, it is irrevocable. They must continue to do so. So looking at S corporations, we see several differences between C corps and S corps. We've talked about partnerships before. Well, S corporations follow very similar rules as do partnerships. So if you recall from Chapter 14, when we discussed partnerships, many of those rules will apply to S corps. And S corps are very different than C corporations, since S corps are not generally taxable entities. And S corps file on Form 1120S. And they're pass-throughs like partnerships are. To be an S corp or receive subchapter S corp status, they must be a domestic corporation. They can only have 100 or fewer shareholders in one class of stock. And the holders of those stock must be U.S. citizens or resident aliens. As I said before, subchapter S distributions are not taxable to the shareholders. Shareholders have already been taxed on their income that they've received on Form K-1. So this is a brief overview of the chapter on C corporations. Finally then, we'll do a brief overview of what you can expect to see on the final exam. Now, I'll be going over in some detail what you'll be tested on. And I strongly recommend that you have some either prepare to type some of what I'm telling you or take notes. And of course, since this is a video, you have the option and the opportunity to pause at any point to take notes and then continue on with the video so you get all the information. So on the final exam then, one of the things I would know is that I would know the impact that boot has on whether gain is recognized on a like-kind exchange. You might recall that if boot is received, it can trigger tax, recognition of tax to the lesser of the boot or the gain. If the gain is given or paid, there's generally no tax consequences for the pair. So I would know that. I also know that depreciation is considered an ordinary expense. I would know the rules regarding liquidating distributions, especially as they apply to partnerships, liquidating distributions. Regarding pensions from Chapter 9, I would know the kinds of pensions and whether those pensions can be contributory or non-contributory, and know the difference. I would know how to handle royalty income and know where it's reported, and know the rules regarding royalty income. I would know how to calculate the at-risk calculations that we did in the chapter problems, know how to determine how much an investor has at risk, for example, in a partnership. I would know what form W2C is for, W2-C, W-2C. W-2C, I would know what that is. Also, I'd know that, and I'll just mention this, that the alternative minimum tax depreciates at 150% of straight line. So I would know that using the alternative minimum tax calculation for depreciation, that depreciation rate is 1.5 times straight line, or 150%. Again, as I'm going through, feel free to stop, to catch up on your notes if you need to, and then continue on. Another thing I would know is how to calculate the federal unemployment tax, FUTA, F-U-T-A. I would know that the premium, if a premium is paid for a partner by the partnership, that is income to the partner. I would also know that assumption of debt by somebody else is considered income to the person who was relieved of that debt. So if somebody has agreed to take my debt and pay it off for me, that's income to me, and I have to report that. I would know the passive loss rules as well. Remember, I mentioned earlier you should know how to calculate at-risk amount, just using that formula in the book and plugging in the numbers to determine how much is at risk. And then that second test is the passive loss rules. Just kind of know those few rules for passive loss as well. I would know how to calculate the child tax credit, and I went through some examples in a video regarding Chapter 9 on how to calculate the child tax credit. Know what annuity payments are. Know what annuity payments are. Know what separately stated items are. Just know what that means for partnership distributions on K1. What are separately stated items? I would know the characteristics of a Roth IRA, and I would know that Roth IRAs are not employer-sponsored retirement plans. Now, as far as the alternative minimum tax is concerned, you might be given some numbers on one of the problems, and you'll have to just plug those into the AMT formula to determine alternative minimum tax. There won't be a lot of values there, but if you have that formula bookmarked, which, and again, this exam, you're able to use your PowerPoints, notes, and the textbook and calculators. If you have that bookmarked, that formula, then it's a relatively straightforward matter to punch in the numbers in the AMT formula to determine the alternative minimum tax. Know what a SEP plan is, a Simplified Employee Pension Plan, and the limits, the contribution limits of a SEP plan, SEP, Simplified Employee Pension. Know the nature of profit sharing plans. Regarding tip income, I would know what form employees should report their tips on to their employer and by when they must report those tips. So what form tips should be reported to their employer and by when must those tips be reported to the employer. Know the retirement savings contributions AGI limits. So I mentioned on earlier videos that sometimes those contributions to retirement plans phase out when income gets too high. I would kind of at least be familiar with those limits. I would also be aware that Roth withdrawals are deemed to come first from contributions and then earnings. I'll say that again. I would know that with Roth distributions, money you're paid from your Roth account when you retire, for example, it's considered or deemed to come first from contributions, which would not be taxable, and then from the earnings, which for Roth would not be taxable either in most cases, unless there's they haven't held it for the requisite amount of time. I would know the materiality participation rules for real estate investments. For example, if a taxpayer materially participates in that real estate business, then that should appear on Schedule C and be taxed that way. The withholding allowance for 2017 is $4,050, so I would know that as well, have that information available. I would know about pre-contribution gains and how pre-contribution gains are calculated. So know how pre-contribution gains are calculated. That rule we talked about in Chapter 16 on payroll that says that if an employer accumulates $100,000 or more in tax liability, I would know that they have to report that the next banking day. That is to say, they have to just make a contribution and deposit that by the next banking day. I would know the rules regarding the child and dependent care expense credit. And then finally, I would know that royalties can be earned, so I would know how royalties can be earned. Right, and that's an overview then of all of the items you can expect to see on the final exam. Please let me know if you have any questions.